All right, folks, I know the XRP price is wearing us out, but something that I never get tired of is covering the fundamentals, which just continue to grow, continue to expand. And right now, we are witnessing DeFi exploding on the XRP ledger. The amount of XRP that's getting locked up in these various bridges, the AMM liquidity pools, that is starting to accelerate. And this moment in time has me more bullish than ever on XRP, which I know you are not shocked by that statement, but I'm not just saying that. I'm not just here to be a cheerleader every single day, rah in the XRP community. I want to wake up as many folks as possible to this opportunity, which is much bigger than XRP. This is the greatest transfer of wealth in world history. If you actually watch my content instead of just looking at the thumbnail, looking at the title and calling it clickbait, getting offended and running away and crying, or, before you run away and cry, you leave a little comment. If you actually watch my content, we break down the current events, all of the financial markets, all of the asset classes. I share with you guys in an effort of full transparency how I plan on moving in real estate and private equity. Am I looking at stocks? What am I doing with precious metals? What am I looking at for crypto? I'll give you my honest opinion on most crypto, which is very easy because I think that 99% of them don't have any utility. And so what most folks are looking at is charts in front of them, price action right in front of them, and completely distracted from the fundamentals that continue to get better and better. And what I want to be remembered for is not just being hype about XRP, guilty as charged. These fundamentals are as sexy as can be, for an investment thesis, sorry, not sorry. But what I want to be remembered for as well is being right about what's taking place in the current events, providing insightful analysis on all of the financial markets and asset classes. And that's exactly what we're going to continue to do on a daily basis. If you appreciate our content, please make sure you subscribe, hit that notification bell so you don't miss any of our updates. And if you can, it really helps us by sharing it out far and wide. After you smash it, tap it, hit it up. Now, let's get into it. So the markets basically remained sideways yesterday while everyone was kind of anxiously waiting to see whether or not Israel was going to strike back at Iran. So we didn't get much action in the markets yesterday, and now it appears that the U.S. has asked Iran to allow a symbolic strike by Israel without retaliation to save face, which was rejected outright. So I don't know if that was a call from our good friend Joe. I don't know where that came from, but nonetheless, it appears that everybody's trying to calm the tensions right now, and we continue to pray over here. It's really not even a joking matter. We've been taking the World War III events very serious, adding it to our analysis, adding it to our thesis, and this is why I was expecting a 20% pullback, and that's exactly what just played out. 20% pullback, XRP back to 50 cents. Maybe you saw my video that I dropped earlier, 2-for-1 special on XRP, right? We're taking advantage of this opportunity while we also prepare ourselves on all of the fronts, because we understand our XRP ain't going to feed us through the storm, through whatever they got coming our way. And I'll tell you what, they got a lot of folks lined into and concentrated into. It's the Magnificent Seven stocks. We have more concentration than we've had in any other time in history. We have just taken out the Great Depression data point right here for market cap of the largest stock relative to the 75th percentile stock. This is how concentrated our stock market is. And how do bubbles finish? How do bubbles and blow off top rallies conclude? It is concentration in a handful of stocks, in a handful of companies right before it blows up. Now, what's incredible is what they're doing up in Canada. I continue to pray for our good brothers and sisters up north in Canada. I love Canada. Great people up there, beautiful country, tremendous resources, and they should be so much better off than what they are. But once again, similar to what we have in the United States and many other countries for that matter, is you just have poor leadership, right? Leadership that's completely sold out, completely serving the agenda, and they're not serving the people. And to, case in point, take a look at this nonsense, folks. Canada just upped capital gains from 50% to 67%. Canadian equities are already hurting for volume and momentum. Could be a lot of profit taking coming before the June 25th deadline. And this used to be capped at like 200,000 or 250,000, I guess. That's being removed. So complete wealth distribution, and I call it the greatest transfer of wealth in world history, guys. This is part of it. This is why I put out the warning, guys. Not everybody makes it. Not everybody gets on the right side of this thing. There's a lot of folks that thought they were getting on the right side of this thing by making some good investments, having some capital gains, and then now when you go to harvest them, you're going to be paying 2/3 of those gains are going to go to taxes. What's the point of making money anymore? What's the point of producing? What's the point of investing? What's the point of even living in the country anymore? And, they short millions of units on housing, and they continue to bring in millions and millions of more people. And then they do this nonsense. And I asked the question, right, how's your program working out? Well, I don't like to pick on my Canadian friends up north, but it ain't working out too well. And God bless all of the patriots that we got up north. I know there's many of you, many of them in my community. You guys are great people, and it just breaks my heart to see what's going on up there with you guys. Nonetheless, let's bring it back to America, where we are having just terrible earnings from the banks. And we've been talking about this. The banking crisis is not over. The small regional banks, few more are going to get sacrificed before this really plays out completely. And the systemically important ones, the ones that are going to get saved, well, they are going to get saved. But in the meantime, they are taking historical losses. Let's take a look. Bank of America stock down 5% after reporting huge earnings downturn. Profits down 18%. Now, they're still raking in billions, but nonetheless, the profits are down 18%. And remember, consider the unrealized losses on those long-term treasuries. We cannot forget that. See, their profits are down 18%. If they had to realize the losses, the $100 billion worth of losses that Bank of America had just alone, right? And I think that they've actually brought that down somewhat. They've been able to restructure some of that, but nonetheless, the problem's still terrible. And then we have Jamie Dimon selling off $33 million worth of JP Morgan stock yesterday. He's now sold off, I think, over $100 million this last year. And this is the first time that he's sold ever, right? So while all these guys are telling you everything's okay, everything's fine, well, actually, Jamie Dimon did say that an economic hurricane was coming in 2022. Nobody took him serious. Nobody understood really, that it was hitting back in 2022. We were in a recession, but nobody wanted to call it that because it was politically incorrect. Might have offended somebody, but here we are, and now they're hitting the exits. And I retweeted this last night as well too. Mark Zuckerberg, someone tweeted out a video of Mark Zuckerberg, and he's at some other UFC deal. Once again, Mark Zuckerberg making an appearance at some UFC deal. And like I said, he's out here laughing, playing around, playing cute. And the person who shared the video commented, they said, whoever's running his comms, communications, and PR is doing a great job. And they are. They really are. They're making him look all hip, cool, having a good time. But what is he doing behind the scenes? Well, he has to report the sales of his Meta stock. And what we found is that he's absolutely been dumping Meta stock. But then to add on to that, he's building the bunker. So it's all fun, dance, laughing around, playing cute for the cameras. Behind the scenes, he's preparing for the end of the world. Now, continuing on, we have PNC Financial said that their net income fell 22% from a year earlier to $1.2 billion or $3.10 per share. M&T Bank net income dropped to $505 million. The bank said Monday, it's financial run season. Yeah, they're getting hurt. Even the central banks as well. Turkey's central bank posted an astonishing $25 billion loss last year. And actually, that's actually small compared to some of these other central banks taking historical losses. That $25 billion loss by Turkey's central bank, it's actually relatively small compared to others. And of course, Turkey continues to experience massive inflation. Many of these other countries too, the inflation is much worse. To our audience outside the United States, you guys know you're already going through it. Here back home, we thought that inflation was going to be fine. We thought the Fed was going to win the fight against inflation, and that's not true. And what just happened is the bond market just gave us another interest rate hike. That's right, folks. Go look at the yield on the 2-year and the 10-year, just spiked back up. It essentially just priced in a rate hike for us, right? The market just gave us a rate hike. And you ask, well, what does that mean? How does that relate to me? How does that relate to the average person on Main Street? It relates back to that 10-year treasury is what your 30-year mortgage is pegged to. And what just happened for our mortgages? Well, the average rate on a 30-year fixed mortgage in the US rises to 7.43%, a new high for this year. So we're nearly back up to 7.5%. Remember, the high that we just hit this cycle was 8% for our 30-year fixed rate mortgage in the United States of America. We are well on our way back there. We have not seen mortgage rates this high since early December 2023 when the Fed said rate cut talks were premature. Here we are once again, and they're continuing to say that they're premature. And the market priced in 6 rate cuts in 2023. They priced in 7 in 2024. And now we're coming back down to reality. And the expectations have dropped down to about 2 or 3. And maybe the market, they're still delusional in the market. So they're probably pricing in 3 or 4. I believe that at best, we are looking at maybe 2, maybe at best. Okay. And the bond market, but the bond yields actually, they had already priced in the rate cuts, and that's why it had dropped, and that's why the mortgage rate had dropped below 7% briefly, is because the bond market didn't know what they were doing. It's not just the crypto traders and speculators that are delusional, and the stock market that's all piled into the same 7 stocks. They're all delusional, but the bond market missed this one as well too, and the bond market's supposed to be more sophisticated. They're supposed to be more seasoned, more conservative, and have a better understanding of where the market's going. Well, the bond market, you got it completely wrong because the yields dropped. People were, eating them up. And now they're starting to realize, oh, crap. It is going to be higher for longer. So now the yields are spiking once again, and this is taking our 30-year mortgage back up to 7.5%. This is going to be one of the most unaffordable times in recent history. In fact, maybe even in all of America's history, right now in April of 2024, because mortgage rates are back up to nearly 7.5% and prices have not come down, there's still a lack of supply in many markets. We are experiencing one of the most unaffordable real estate markets in the history of America when you compare it and you adjust for inflation. This means that the monthly mortgage payment on a $500,000 house with 20% down is now $3,500 a month. Do many people have 20% to put down? No, absolutely not. Absolutely not. The $3,500 a month figure also does not include property taxes, insurance, and maintenance, all of which are skyrocketing. And many people are getting hit, and many new home buyers are getting hit. They don't understand, right? Their pricing and their payment is priced in with property taxes, where basically you're paying property tax just on the land. But then the county's going to reassess your property now that there's a home built and now that you've bought that home. And so now they're getting slapped with property tax increases that they haven't set aside, that are not fixed into their mortgage. And now they don't have enough there in their escrow. Meanwhile, the median U.S. home is now selling for a whopping $417,700. This is what we're talking about here, folks. You put down, or even if you put down very little, you're still well over $3,000 a month in a payment. It's just not something that most folks can swing. That's a problem. And so it's starting to break, guys. This is why I've made a playlist on my YouTube channel, Real Estate Reset, where I do specific real estate updates. I've already done a few that I've posted there. More of those on the way. And then this is what we've been saying with this stock market that was due for a correction. You've seen massive sell-offs for the Dow Jones, all the major indices. We had a major sell-off and then kind of a pause as we're now waiting to see, is Israel going to respond? Are we about to see oil spike? What's going to happen, right? There's a lot of concerns, and there's good reason to be concerned from a valuation perspective as well. Even if the bomb doesn't go off, even if bad stuff doesn't happen in that regard, the valuations can't be justified. There is a lot of reason for concern. Is there concern for the XRP community? Well, for those that are speculators, that are, emotional and that don't understand fundamentals and are completely distracted and that want to get rich quick, yeah, there's some concern. For those of us that can take a deep breath, that can zoom out a little bit and stay focused on the fundamentals, and many of us don't even look at price on a daily basis, as a matter of fact, right? I take a glance at it maybe once or twice. That's it. Because we're focused on the fundamentals, and what we're witnessing right now is organic growth and DeFi exploding on the XRP ledger. Let's take a look. So this is the update here from Vet. Huge shout out to Vet. He is on the UNL validator list. So he's one of our validators that gets to vote on amendments and everything. He's part of XRP Cafe. Huge shout out to Vet for keeping us updated. Organic growth of the XRP Ledger AMM so far reaching 4.3 million XRP in total value lock. Now, what's happening is this is the amount of XRP that's total value locked. We got to be clear kind of on these terms. There's only 2 million, it's about 2.3 million XRP is the most recent number that I just got this evening. And so it's only 2.3 million XRP, but the reason why they're saying 4.3 million XRP in total value lock is because if you add up all the other AMM liquidity pools with the other assets, right, the issued assets, for example, I'm in the XRP Casino Coin liquidity pool right now, right? If you add in Casino Coin and all the other tokens that are part of it, the total value lock is 4.3 million XRP in the AMMs, with about 2.3 million of that being XRP, right? Because you split it basically half and half, right? You got to deposit to both sides. Now, Vet shared a while ago that we have about 30 million XRP that is locked on the XRPL used in other DeFi protocols on other chains like ClaySwap, Kava, and Uniswap. So because we didn't have an AMM, because we don't have smart contracts, because we didn't have all these utilities and functions on our ledger, we have 30 million XRP that's already been locked up and is being used on these other blockchains. This XRP will slowly but surely find its use on its home chain and get more used in native protocols like the AMM and maybe in the future the lending borrowing. Remember, we just got XLS 66D that is on-chain native lending, part of the protocol, no smart contracts. Why is that important? Because now we're seeing that Uniswap, oh yeah, they're having a good time over there, aren't they? Well, they were. Now they've been served with the Wells notice and they're about to be sued by the SEC. Uh-oh. One should not underestimate the slow but sudden dynamics, especially in DeFi. Below, you can see the TVL development of Uniswap and the stacking curve of TVL. See, it starts slowly and then all of a sudden. And that's exactly what we're going to experience on the XRP Ledger DeFi in the amount of total value lock, the amount of XRP that's being locked up. We have all these various bridges. You have the Corium bridge that already has a couple million XRP locked up. And we have Acceler network that's going to tie in the XRPL with 60 other blockchains. We have the EVM EVM sidechain that's about to be going live as well. We have the XLS 66D native on-chain lending protocol. And the reason why I'm so excited about all this, guys, is because we're doing this with legal clarity and we're doing this at the protocol level. Uniswap is a layer 2 smart contract that's built on top of Ethereum. That's different from the XRP Ledger, which has the AMM built in. It's a function that's built into the main protocol, layer 1. No smart contract. Which, what does that mean? It means that we're not going to get hung up with the SEC trying to say that our AMM is some sort of smart contract and anybody that uses it is investing in unregistered securities. We're not going to have to worry about that because it's happening at the protocol level, completely decentralized. There is no middleman. It's happening decentralized through the protocol. And once again, it sounds like nothing. I put out the tweet, a couple days ago, 2 million XRP already in the AMM. Supply shock dynamics starting to come into play. Now, everybody focused on the 2 million and they did the math. Oh, that's only 0.002% of the supply. Oh my gosh, Zach, are you brain dead? Are you stupid? They got all worked up. And I said, guys, the dynamics are coming into play. This is the start. Look at the trajectory of Uniswap. Right? It just spikes. It's slowly and then all of a sudden it just takes off. This is the start. It starts with 2 million in the XRP AMM. Right? Next target, we're looking at 5 million. Then we're going to hit 10 million. Right? 10 million is going to be a big number. Okay. But as Vet pointed out, we already have 30 million XRP that's already locked up and being deployed in other blockchains. That's going to work its way on back. Well, you want to keep your XRP locked up and use it on Uniswap, which is getting sued by the SEC? Or do you want to move it back over to the XRP Ledger where you can just use the decentralized protocol and not have to worry? Sounds pretty good to me. You guys let me know in the comments down below what you think about this organic growth for the XRP Ledger. If you can do me a favor on the way out, let's like it, let's tap it, let's share it out far and wide. God bless you all. Thank you so much. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.